Welcome to Forkast IQ. As the world accelerates into the digital economy, this is the show where we're going to help you stay ahead with the latest in Web3, crypto, and data, where we look beyond the headlines to get you insights that power smarter decisions. I'm Forkast's Editor-in-Chief Angie Lau, and it's great to have you with us. All right, let's get started here. The drama of traditional finance becoming a tailwind for crypto. First, you could feel a little relief all around as the First Republic Bank saga comes to at least an end of this chapter, but no doubt more to come. But for now, JPMorgan Chase has swooped in and agreed to pay $10.6 billion to the FDIC, the Federal Insurance Deposit Corporation, to take over First Republic Bank. Now, the deal was announced on Monday as regulators seized the failed San Francisco-based bank. With $229 billion worth of assets on its books, First Republic's collapse marks the second biggest banking failure in U.S. history. Now, in a statement, JPMorgan Chase CEO Jamie Dimon said, quote, "Our government invited us and others to step up, and we did." As the extent of collapse became clear, U.S. President Joe Biden reassured the public that the FDIC and not the taxpayer would bear the costs of the deal. It's another irony not lost on the growing number of people who are seeking haven in crypto. So how did we get here? Well, this did not happen in a vacuum, instead triggered by Fed policy and the decisions that led to falls of a slate of banks recently. First Republic Bank disclosed last month that it had lost over $100 billion in deposits in the first quarter of the year. The loss in shareholder confidence could be seen clearly as its share price fell to just about 33 cents by May 3rd from the heady days of $120 less than 2 months ago. The collapse of First Republic Bank makes it the fourth bank failure this year, following that of Silvergate, Signature, Silicon Valley Bank, and Credit Suisse. While the crypto industry has been challenged since 2022, the fall of specifically Silvergate and Signature, two banks that were part of the crypto industry ecosystem, was another big blow to firms in Web3 in the US. Because as Fed interest rates rose, the strategy of holding long-term treasuries became a losing bet amidst customer withdrawals, and crypto got caught in the crosshairs. So it's going to be interesting to see how the First Republic Bank rescue plays out, as the bank was more receptive to crypto firms than most before its collapse. Meanwhile, reports suggest that some crypto companies have found welcome and some solace and bank accounts in JPMorgan as well as other too-big-to-fail banks. Let's see if that continues, because that means that we might see that whatever is left of First Republic might still be open to crypto business. But as the federal government and agencies step into the fray, we do know that crypto is becoming a political hot potato in the U.S. Speaking of which, crypto regulatory murkiness in the U.S. continues to weigh heavy on Coinbase. Earlier this week, CITI cut its rating on the stock to neutral from a buy, with a new price target of $65 per share. Now, CITI said that while the company is a leading firm in its category, the exchange is now being tasked to advocate for a reputationally damaged industry. Now, the NASDAQ-listed crypto exchange has lost over 35% of its market cap since late March, when it received the Wells notice from the Securities and Exchange Commission in the U.S. All this news means it's been a hectic week, as always, for crypto markets. Megha Chadha of Forkast gets us all the details. Megha, how are cryptocurrencies looking this week?
Angie, it looks like a mixed day of trading so far. Overall, crypto market capitalization is hovering around the $1.2 trillion mark, with Bitcoin continuing its market dominance. First Republic Bank collapsed earlier in the week, and Fed and ECB rate hikes later on led to some interesting market moves. Bitcoin jumped to as much as $29,800 levels as First Republic came crashing down on Monday, and investors looked for safety. But those gains gave way, with BTC hovering around 29,300 levels by Friday morning in Hong Kong. Ethereum, on the other hand, was in a $100 range through the week, settling close to $1,900 level on the last check. Both Bitcoin and Ethereum have lost about 0.5% in the last week. But interestingly, though prices have been soft, number of Bitcoin transactions hit a record high in the earlier part of this week.
Thanks, Mega. All right, in the world of Web3, it is a decentralized and global one. So while short-term market momentum has been quite strong, Standard Chartered is looking at the bigger picture. Recent research from the bank says Bitcoin, the OG of the crypto world, could be trading at six-digit levels by the end of 2024. Jeffrey Kendrick, who heads crypto research at Standard Chartered, is here to tell us more. Welcome to Forkast IQ, Jeff.
Absolutely, and thanks for your time.
You know, Bitcoin rose from the ashes of the great financial crisis. It's a story that we've told since the very beginning. But once again, we seem to be in the midst of bank trouble in the US as well as Europe. How do you see these events in TradeFi impacting digital assets?
It makes a lot of sense that Bitcoin has now started rising again on the back of concerns in the banking sector. When Satoshi first introduced Bitcoin in 2008, it came right around the time of the global financial crisis. So at that time, banks were suffering, and it made a lot of sense in terms of the need, if you like, for a trustless, very liquid asset that was peer-to-peer and didn't require any intermediaries. And so it makes sense that big picture, we've gone from about 20,000 Bitcoin before SVB to about 30,000 now. Going forward, I would expect the same type of driver to mean that investors that had been either ignoring crypto assets or Bitcoin in particular, or been short Bitcoin coming into 2023, are going to keep re-engaging with the asset class, and particularly Bitcoin.
That's a really good point. Could Bitcoin then hold its position as the digital gold?
Absolutely. So I think linked to that previous point around concerns in the TradFi sector, Bitcoin has been much more highly correlated to gold over the past 6 months or so. So it makes sense that since SVB, both gold and Bitcoin is headed higher. The big difference, if you like, between Bitcoin and gold, though, is that crypto assets remain unregulated. And I think once we get regulation, that'll probably see institutional money into the space. And as a result of all of that, Bitcoin should start to increase its share of the Bitcoin and gold mix, if you like. And when that happens as well, that should see volatility lower, etc. So you can get into this positive cycle medium term, regulation, institutional money, and lower volatility. And so I think that's probably what we need medium term, which is one of the bigger picture drivers that I pointed out in a recent note that can see us up to 100,000 in Bitcoin by the end of 2024.
Okay, your report says you see $100,000 for Bitcoin by the end of 2024. In the shorter term, though, where do you see BTC heading over the course of 2023?
So before SVB, we're at 20,000. SVB and that concerns around the TradFi sector have added 10, so that's seen us up to 30,000. I'd say the Bitcoin dominance point, i.e. Bitcoin increasing its share of overall crypto assets, can probably see us up another 10,000 or so. So that gets you to about 40,000. Bitcoin miners are now a lot more profitable as well. When we're at 15,000 in November, I estimate the average of the large US listed Bitcoin miners, their cash cost is about 15,000. So when we were down at 15,000 in Bitcoin prices in November, there were some serious concerns that perhaps Bitcoin miners would be selling coins in size and potentially liquidating those positions. But now we're at 30,000, that fear should go away. So that probably adds another 10. So that gets you to about 50,000. And then it probably depends on how the Fed react. And there is still a reasonable relationship between crypto assets and the NASDAQ in particular, given the link to the tech sector. It's essentially an extension of tech, if you like. If that comes through, I'd say another 10. So that gets you to about 60,000 by the end of 2023.
So it seems Standard Chartered is really optimistic on crypto and Bitcoin in particular. What is driving Standard Chartered's approach, though, to crypto? The bank appears much more open to blockchain and crypto tech compared to some of its other peers. How do you think about it?
I can't really talk to our competitors in terms of their desire, but on the SCB side, we have been relatively early to this space. We recognise the importance of blockchain technology. We recognise the importance of this broader ecosystem to quite frankly, a lot of our core businesses in terms of financial markets globally. So I would say over the next 5 to 10 years, this becomes a much more important part of financial markets, and SCB is at the forefront. In addition to that, our core footprint as a bank, which is in emerging Asia, emerging Africa, Middle East, etc., some of those core use cases on Bitcoin in particular and other transactional coins, you could also say are much more important, right? So it makes some sense to want to have some assets in Bitcoin and other in.
So we've been widely reporting the collapse of Silvergate, which had emerged as the banker to crypto firms. It's really left a critical gap in the system. How do you think about that? How does Standard Chartered consider the current landscape and potentially your role in the segment? How big are crypto clients for the bank, and what are your offerings? What is your sentiment when it comes to crypto at the moment?
I think the SVB and other financial collapses we've had recently were very important parts of the crypto ecosystem. It makes sense then that we need more longer-term, larger financial players like Standard Chartered to step into this space. So what we've had in the last 6 months or so is you had concerns around centralized exchanges, so the FTX collapse in November. More recently, you've had crypto, let's call them crypto-friendly banks like SVB that have also had concerns. And so I think that opens up the opportunity for banks like Standard Chartered to offer broader trading services, custody services, etc. And so I think if we fast forward a few years from now, players like ourselves that have been in other financial spaces for a long time have a lot of the plumbing, if you like, around custody and other solutions that will be required medium term in crypto. It's time for us to step into this space. And over time, that'll probably lead to institutional money.
Jeffrey, appreciate the insights there. Thank you so much. All right, time for a quick break, but we will check in on the NFT markets when we return. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
All right, welcome back to Forkast IQ. I'm your host, Angie Lau. Now, one of the big things we're seeing from our forecast indexes and NFT data from CryptoSlam is that the rise in ETH gas fees has taken the sheen off of NFTs, non-fungible tokens. Volumes have been dropping as floor prices of prominent NFT collections slump. All right, let's check in with Mega once again to find out what she's spotting on this end of the market. Mega, how's it looking for NFTs right now?
Angie, like you said, it's been looking pretty rough for the NFT markets of late. NFT sales are headed in one direction, and that is down. So far in May, only $80 million worth of NFTs have been traded, and we've really seen that pressure build across chains. In the last 24 hours, NFT sales on Ethereum have fallen over 25%. With the ETH composite falling 1.5% through the week. On the other hand, NFT transactions on Polygon plunged 30% since yesterday. And among the forecast indexes, Polygon composite is seeing the sharpest cuts for the week as it drops over 3.5%. Solana composite pulled down 2.6%, even as Forkast 500 index fared marginally better, having lost only 1.7% over the last 7 days.
Meanwhile, on Monday, NFT marketplace OpenSea's rival Blur launched its peer-to-peer perpetual lending protocol for NFTs called Blend. The protocol enables new yield generation opportunities and higher liquidity for NFT holders. Blend allows users to put up collateral for purchasing high-cost NFTs, which its developers say is the same principle as a mortgage to buy a house. According to crypto data platform Dune Dashboard, Blend has handled over 1,000 loans since its launch, involving more than $29 million worth of ETH. Let's find out a little bit more and dig into the numbers. Right now we've got Forkast Labs strategist Yehuda Pesher to talk about Blend and other stories making waves. It's great to see you, Yehuda. What potential risks and benefits could arise from Blur's new Blend lending programs for NFTs in your view? And how do they compare to existing lending protocols in the NFT space? What's different here?
Lending allows you to almost instantly have liquidity, to be able to keep your momentum going in a way. So it's interesting. There have already been a couple lending protocols out there. There's BendDAO and there's NFTFi, so they already exist. What's different about Blur's new Blend program process is the lenders lend directly to the borrower, while the other protocols, I believe, are peer-to-pool. These are peer-to-peer. And there's also no set terms on these loans where the lender can get back his money at any time that they want by triggering an auction, right? They don't have to wait for a set term to expire. So in a way, I think it could create a secondary market for these NFT loans. But it's just, I think it is important to have tools like this that do enhance the ecosystem. And so I just think the more tools you give traders and professionals, the better it is for NFTs as a whole. I think it's a good thing that it's an interesting product they made at the very least, and I think it's a good product.
So what are some of the factors inhibiting liquidity in the NFT market right now?
Well, volume first and foremost is affecting liquidity right now. Volume is just very low. People are they're being a little more careful with their investments and where they put their money. And when you don't have a lot of people actively looking to buy, well, that is driving prices down. I mean, tremendously. Gas fees still being very high is a huge factor as well. And that's being driven by meme coins, which are still really the talk of the town in the crypto space.
All right, let's talk about the other big news of the week. Sotheby's has launched a secondary art marketplace on Polygon. How's that going to impact the NFT space?
Well, I think it's good to have big established names like Sotheby's, making these secondary marketplaces for art. For me, I'm excited to see a reputable art marketplace on Polygon, which I don't know that any existed before. I mean, there are definitely some art platforms on Polygon, but none that had the name like this. So I'm thinking it may draw a different caliber of artists to that blockchain, which again, I don't think I've collected a single piece of art on that blockchain, which had surprised me when I realized that. So I am excited to see what that may do for that blockchain. Right now, the Polygon is thought of as the blockchain for gaming and for DeFi, but never art. And that does change here. I think we'll see high-priced pieces on Ethereum on the Sotheby's marketplace for sure. But again, just would be very interested to see how the Polygon art plays out over there.
All right, we got to talk about it. Artificial intelligence is all the rage right now. Have you seen any interesting examples recently where artists use AI tools to create or enhance their projects? How is this bleeding into the NFT space?
An interesting new meme coin came out just in the past few days called Turbo, which was created by an artist who I believe his work has been sold at Sotheby's as well, so just interesting coincidence. But he used ChatGPT with the purpose of making a meme coin. So he fed it these prompts and commands, and he told him the rules like, I want you to create a meme coin with a budget of $69 to create it. I want you to write the code. I want you to give it a name. And it helped him along the way. It asked him, just for the sake of keeping costs down, that he learn to code. And that would, again, keep him within his budget so he could create this coin. He then asked the ChatGPT to actually show him how to learn the code, and it did. It gave him documentation. He was able to deploy this coin, and I believe overnight it went to a $30 million market cap. His goal was to get it in the top 300 crypto, and he, I believe, made it there already. And now we will see if it has a life of its own. But very interesting how powerful those AI tools are and how they already have a tremendous impact in crypto.
All right, my friend. Thank you so much. Thanks, Yehuda, for joining us with those insights today. On that note, let's take a quick break, and we're going to follow the buzz around Asia. We're going to take you around the world and dive deeper into Asia's role in Web3. What's happening there? Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast News.
All right, you're joining us on Forkast IQ, where we take a look at the data and all the happenings in Web3 to keep you informed and ahead of the curve. Now, one thing you're going to get from us on this show will always be the global perspective with our correspondents around the world. This is a decentralized technology after all, and critical player here are the regulators. As we've reported and as you've heard, the United States has been turning up the regulatory heat on crypto projects. And what we've seen is that it's forcing digital asset firms to start looking elsewhere, specifically to the east. Many specifically have their eyes set on Hong Kong. Hong Kong authorities have taken a multi-pronged approach to turn the city into a global digital asset hub. Now, the Securities and Futures Commission, or SFC, will release a new licensing regime for virtual asset service providers, or VASP, on June 1st of this year. Along with that, the SFC is also looking to issue guidelines for crypto exchange licensing this month. That is all to be expected. Now, just last week, the Hong Kong Monetary Authority directed banks in the city to provide services to registered crypto firms. This is huge because debanking of crypto firms, especially with the vulnerabilities that we're seeing in the United States, is a critical issue. So it's interesting to see if these efforts are starting to bear fruit. We sat down with Seychelles-based crypto exchange BitGet, which says it is in the process of applying for a license to operate a crypto exchange in Hong Kong. It's hired a compliance team to help with that process. BitGet's managing director, Gracie Chen, says Hong Kong could potentially emerge as a regional crypto leader. We sat down with her.
I personally think Hong Kong might have an opportunity to, become Asia's Web3 hub again. Right now, maybe the hub is like Singapore, a few other hubs as well, but Hong Kong has an opportunity to play in this game too. And I think I see lots of their ambition in achieving that.
Now, when it comes to global crypto adoption, there's one region that stands out, and that is Southeast Asia. Everyone from ecosystem developers to venture capitalists are flocking this way. Why? Well, we sent Forkast's Jenny Ortiz out to take a closer look at what's driving the momentum in the region.
11 countries with a growing population, rising income, and a digitally aware middle class make up Southeast Asia. It's emerging as a destination for entrepreneurs and investors hoping to create a mark in the startup space. A 2022 report by venture investment firm White Star Capital said there are more than 600 crypto and blockchain firms headquartered in the region, which have raised almost $1 billion in funding. And the reason why the region is attracting this much investment? It all boils down to crypto adoption. According to the latest research by Chainalysis, the top 2 countries in the Global Crypto Adoption Index are from the region: Vietnam and the Philippines, followed by Thailand at number 8.
We're seeing the most growth throughout Southeast Asia. In markets like Singapore, the Philippines, Thailand, and there's a wealth of different cross-border payment and remittance use cases.
The rise in crypto adoption in Southeast Asia is thanks to the success of play-to-earn games and non-fungible tokens, or NFTs, which really took off as COVID hit the region in 2020, leading to hundreds of thousands losing jobs. And the success of play-to-earn games led to many banking on them for their livelihood, at least for a bit. During its peak, more than half of Axie Infinity's players are from the region. But Axie Infinity and NFTs are now a long way on from the heady days of 2021. With almost 700 million people, Southeast Asia is also the second fastest growing workforce in the world, with a base of 480 million active internet users, which continues to expand. The region's young population is proving to be an advantage.
As sort of new technologies come out, generally it is sort of the younger population and the youth that tend to take to them first. They're more adventurous, a little more sort of risk-taking, and they're less, they have fewer predefined ideas of how the world should be in their heads. And so I think they're just much more open to trying, new things. So definitely from a demographics perspective, I do think that SEA has that advantage and those tailwinds working for it in its favor.
Another reason for crypto to boom in the region is the cross-border money transfers or remittances. According to World Bank data, both Vietnam and the Philippines have a sizable population working overseas who send money home. And the lack of access to formal banking systems gives room to tokens like stablecoins, a cryptocurrency backed by real-world assets such as the US dollar, to grow. Policymakers in the region are also looking into the crypto industry, with countries like Singapore, Thailand, and Indonesia developing regulatory frameworks for the digital asset.
I think Southeast Asia have actually viewed crypto and Web3 and blockchain as actually a force for good. And then we've actually seen sort of, some of the positive benefits of it. So it's more about building those positive benefits of it. And also, just giving people an opportunity, I think, to participate in a global digital economy without having to move to Silicon Valley.
Now, despite this growth, the market crash and big crypto firms' fallouts last year brings one issue to the forefront: trust in the industry. And building that faith back in the crypto ecosystem is something that's being taken seriously.
A lot of our responsibility and a lot of our focus this year is also just sort of setting the narrative straight and really just focusing on the underlying technology itself and the underlying sort of benefits of what an open, composable, permissionless system can bring really around the world. And especially sort of, provide access to the unbanked and to those that don't have, good access today.
In Angono, Philippines, I'm Jenny Ortiz, Forkast.
Thanks, Jenny. And over in Japan, a Web3 groundswell is forming, with the country playing catch-up with its Asian financial center rivals, Hong Kong and Singapore, in embracing digital assets. Could DAOs help Japan leapfrog to the front of the line in Asia? We sent Forkast's Will Fee to find out what's happening in the land of the rising sun. As part of the G7 and playing host this year to the G7 summit, Japan has crypto on the agenda.
Despite being an early crypto adopter, Japan's path to Web3 has been anything but easy. From the Mt. Gox heist of 2014, where hundreds of thousands of Bitcoin were stolen from the Shibuya-headquartered crypto exchange, to the CoinCheck hack of 2018, where hackers made off with over $500 million, the country once renowned for technical innovation has found itself outpaced over recent years by its regional neighbours. But things are about to change as policymakers explore new ways to kickstart a stagnating economy. The collapse of crypto exchange FTX last November shook up the global crypto ecosystem. But Japanese investors were ring-fenced by the regulations already in play, renewing confidence in the crypto industry. Now, as jurisdictions in the West go through a phase of regulatory clampdown, Japan could be positioning itself to emerge, alongside Hong Kong and Singapore, as a global hub for crypto in East Asia. A government-affiliated white paper released in April outlined this potential pivot toward crypto. And those building Web3 ecosystems in the land of the rising sun seem hopeful about the government's support.
The Japanese government is standing your positive position on Web3, basically. And also, we think there's a huge opportunity to we will get from the government support or local community support.
The white paper called for increased Web3 ecosystem construction and the creation of laws related to decentralized autonomous organizations, or DAOs. And hot on the heels of that paper came this month's DAO Tokyo, held at the beautiful Kanda-myojin Jinja, a 1,300-year-old Shinto shrine in downtown Tokyo, just a stone's throw from the neon lights of tech capital Akihabara. The event, which was the first of its kind in Asia, drew over 350 founders and contributors from all corners of the world. And the excitement was palpable.
I think an event like this is really showcasing true innovation within the Web3 space, that we're not just a bunch of DJs, crypto traders, and that we are actual builders of building technologies, applications that are adoptable not just for those financially minded or the financial industry of blockchain, but also for wider adoption in industries outside of our ecosystem as well.
Experts discuss the advantages that DAOs offer while recognizing the possible points of failure.
One of the biggest challenges I've seen in DAOs is when you join a DAO, you aren't joining just an organization where you're like working and getting a salary. You need to actually feel like you belong. You need to really, really believe in the vision. You need to believe in the mission, and you need to work for yourself. So you need to be accountable. If that bit isn't there, DAOs usually tend to fail.
And while DAOs weren't native to the Japanese crypto ecosystem, Francesco Renzi, co-founder and CEO of asset streaming protocol Superfluid, expects Japan to eventually present a much more advanced version of this decentralized governance form to the world.
The West will come up with some idea, they'll do something, and then the Japanese will copy it. And then 10 years later, the Japanese are the ones you want to look up to because they're doing it 100 times better than anyone else. So I expect the same thing will happen with Web3. But I do also think Japan is traditionally more conservative, so it will probably come a bit later. But the second mover advantage is real, so we'll see what happens.
As Japan aims to become technologically cool again, could DAOs and Web3 be the answer Prime Minister Fumio Kishida is looking for? In Tokyo, Japan, I'm Will Fee.
Well, that's a wrap on this week's show, and I want to thank you for tuning in here. Remember to like and subscribe to this video if you're watching us online, or stay tuned right here on this channel if you're watching from home. It's easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. It was great spending time with you today. It's how the future is shaping up. I'm Forkast Editor-in-Chief and your host, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forkast IQ. Get intelligent on Web3.